We start an important week. This arguably could be one of the most important weeks for the year. There is budget, there is a Fed, and then there are a lot of earnings. 166 points down for the Nifty. It's a gap down start, both for benchmark indices. The breadth is completely dented. And for Sensex also, it's a cut of about 560 points. Now let's look at two stocks. One where numbers were strong, one where numbers were bad. One is IDFC Bank, where the MFI loan book pressure continues, and second is ICICI Bank, where the outperformance continues. For IDFC Bank, the reaction is negative. It is reacting to the bad news. For ICICI Bank, where numbers are strong, the reaction is not there. That just tells you the kind of market we are in. Then Indigo also numbers came on Friday. Could be crucial to mark how Indigo is moving right after the numbers. There are a lot of other factors which are at play in terms of how to look at those numbers, but in terms of market share relevance and dominance, I think those numbers are quite intact. So 0.5% down for Interglobe, and ICICI Bank also is flat, and IDFC Bank is reacting to those numbers, is now down 4%, sub 60 rupees for IDFC Bank.
JSW Steel, the numbers were above estimates. Good recovery in the Indian subsidiaries as well. But again, given that this has been one of those performing metal stocks, the stock actually is down by about 1%, so maybe a profit-taking opportunity there. HCL Technologies, they've joined the Salesforce as an Agentforce partner to drive agentic AI innovation. Not seeing much of a move there. DLF, best ever quarterly new sales, booking collections are up 23%, stock higher by 4%. JK Cement, the Q3 sales volumes, they're seeing an uptick of about almost 5%, so look out for what that stock does. Adani Power, they've gone in for a fundraise via NCDs, and it's been upped now to 11,000 crore rupees. They're going to be raising about 5,000 crore rupees via QIP as well. Macrotech came out with its numbers, pre-sales higher by 32%, but then weak numbers from NTPC, muted Q3, capacity addition has been slow. For Credit Access Grameen, the FY25 guidance has been revised lower for the second time in 3 months. NIMs are at a six-quarter low. Stock is down 13% as we speak right now. So huge blow there. For IDFC First as well, the Q3 numbers are below pole. The slippage ratio is about the highest in about 11 quarters. 5% lower for IDFC First, nearabouts. For Torrent Pharma, Q3 numbers below. US business revenues are flat. Godrej Consumer too, numbers in line, but muted expectations. Domestic volume growth is pretty flat there. 2% lower there as well. NTPC Green as well, weak numbers. AU Small Finance Bank, their FY25 loan growth guidance has now been cut to 20%, and the 26 growth guidance is now withheld. AU Small down 7.5%, very sharp crack there. Yes Bank, what's that up to? Let's see how the market is actually rewarding those numbers, if it is at all. About a 2% of an uptick on a very small base of 18 bucks. That's where the share price is right now. But Kunal, one didn't anticipate this kind of weakness on the index, right? Now sub 23,000, almost slipping to that 22,000, sub 900 mark as well. What's it looking like?
Yeah, the start of course is on the weaker note for the indices. What we need to see is the sector distribution which happens throughout the day, whether it's the high beta sectors like real estate last week, or whether you see the other low beta sectors like maybe FMCG, etc., which could come back into some sort of profit booking or selling pressure. So and that could determine the pace of sell-off and the further levels on the downside which opens up for the indices. In terms of the opening trade, I would look at IndusInd Bank. That's a stock which has been consistently showing signs of weakness. And I think even at current levels, the stock has broken below a critical support of 950, making it a multi-week, multi-month low for IndusInd Bank.